Thank you so much, Jordan, for allowing us to be here today. Myself and Sam, we're here to talk about Georgia Job Tax Credit today, along with Rural Zone Tax Credit that is available here in Georgia. I'll just go straight into Georgia Job Tax Credit first, and Sam will follow up with the Rural Zone Tax Credit. So as many of you guys may have heard of this program. This program has been announced to us since 1994. It's not really popular because it's heavily underutilized tax credit in Georgia. But a lot of the companies, in Georgia, are really happy to receive this type of credit from the state, and they tend to make that move. As you may heard of SK Battery or any other companies that are moving into as a foreign company into Georgia. They get a pretty good sweetheart deal from the Department of Community Affairs and Department of Revenue to generate this credit to offset some of their taxable income liabilities. So with that being said, there are quite a few zones here available in Georgia. Yeah, I'm gonna break it down to you guys how they actually came up with this type of zones. So there are total of 4 tiers. Tier 1 being most economically distressed, and tier 4 being complete opposite of that. So within that tier system, they came out with a couple of other zones, such as LDCT, is called Less Developed Census Tract. Now, on any given from tier 1 through tier 4, and along with LDCT, you need a minimum of 5 qualified employees to take advantage of this program. Now, underneath that, if we're looking at bottom 40 opportunity zone, military zone, these type of zones were added on as a special zoning to give more incentives for less developed areas. So out of 159 counties in Georgia, right, there are 40 counties that gets ranked every year in January by the Department of Community Affairs and Department of Revenue. And this bottom 40 companies are usually the ones that are struggling the most economically, has the highest poverty rate, highest unemployment rate. And what they do is they give special incentives under the Georgia Job Tax Credit by removing the red tapes of easily qualifying them into the Georgia Job Tax Credit program. Now, what that means is, as opposed to LDCT or tier 1 through tier 4, they require a minimum of 5 increase of qualified employees to qualify. But under the bottom 40 opportunity zone and military zone, you just need 2 or more qualified employees to qualify. Now, the benefit of the program is up to $3,500 per qualified employee per year for the next 5 years. And I'll go ahead and explain to you guys later for the benefit, how it breaks down for each individual companies. Now, for manufacturing, warehousing, distribution, processing, telecom, broadcasting, R&D, tourism, services for the elderly, we're talking about these are the activities that qualify under the LDCT. Again, it's less developed census tract. That also qualifies on the tier 1 base, also all the way to tier 4. Okay. Next slide, Sam. So I'm gonna go ahead and give you guys a breakdown of the benefit here. Let's look at, first of all, opportunity zone. An opportunity zone is a pockets of areas that are considered to be in a special zoning. And it's been around since, like I said, way back when it first started. They aren't that many, but a lot of people get confused with, oh, it's a federal opportunity zone. No, this is a completely different. Federal opportunity zones based on the federal tax credit. This is an opportunity zone that initially started the Georgia Job Tax Credit program. The benefit is $3,500 all the way across up to tier 1 and bottom 40. And then tier 2, tier 3, tier 4 gets less of the benefit. As I mentioned to you before, tier 4 is completely opposite from tier 1. So their benefit is only $750. Okay. Now, JDA bonus is a joint development authority. What that means is if you're in a specific area where the Department of Revenue designates certain area of pockets of zones in that county, you get additional $500. $500 of the benefit that you get per qualified employee. So that's the beauty of this program, because if you're in a bottom 40 zone, you're able to pick up the extra $500, making it into total of $4,000 per benefit per employee. Minimum jobs required from opportunity zone and military zone and tier 1 and bottom 40 is just 2 employees. However, when it's less developed census tract or tier 2, tier 3, or tier 4, it makes it a little bit more difficult to qualify because you're going to have more qualified employees to qualify for the program. Now, this program, once it's given to you, the duration of the credit, it lasts for 5 years. So every year we'll do the study and generate these credits for you. And you could apply this into 2 different manners. Number one, as you guys may know, with a lot of different types of tax credits, you could utilize it towards your income tax liability. If it's a flow-through entity, the credits will flow through the individual shareholders. Now, as far as the tier, I'm sorry about that. As far as the secondary benefit is the payroll withholding. So a lot of the business owners like to use towards this payroll withholding method. Now, how that works is, let's say I generated $100,000 tax credit for your business, okay? Your taxable income liability that you could offset is $10,000 because that's all you need to pay. So of the $100,000, $10,000 will go towards your income tax liability to offset your $10,000. The remaining $90,000, you could go ahead and elect that to push over to Georgia payroll withholding. Okay. On that payroll withholding, how that works is every paycheck, portion of your employee's paycheck gets withheld. Okay. It gets withheld. And then when it gets withheld, you as an employer is entitled to submit that to the Department of Revenue, either on a monthly basis or quarterly basis, by filing the Form G7. Now, that credit will be allocated in your Georgia Tax Center account, so that every time you guys run your G7 on a monthly or quarterly basis, you could go ahead and offset that from your Georgia Tax Center account that we're going to put 90,000 into your account. And this study and the credit will be generated for you on an annual basis. Okay. The carry forward is for 10 years as of right now, but there is a talk that it might get reduced to 5 years. But as of right now, even till this day, it's still 10 years. So that is the great benefit of it. Okay. Next slide, Sam. All right. So every year in January, as I mentioned to you, Department of Community Affairs sends out this list to us, and it tells you of the 159 counties, they break down to tier 1, tier 2, tier 3, and tier 4. Now, being in a tier 1, if your county is on this list, I recommend you to reach out to myself or Sam to see if what specific zoning you're actually are located, to see what type of benefit that you're actually entitled to receive. And then from the tier 1, the Telfair to all the way up to Lawrence County, you're in the bottom 40. So if you're in that business doing, not just specifically those list of special businesses activities, you could be any retail business. You could be a hair salon. You could be doing a gasoline company. You could be any type of business. As long as you have 2 or more employees that qualifies, we could generate these credits for you so that you could reduce your taxable income liability. Okay. Here's a case study that we did on a construction company. Okay. Now, if you look at the year 1, they had a qualified of 5 employees, and we generated 17,500. Okay. Year 2, they didn't add any employees. They kept those employees. So adding another 5 employees, they were able to get another 17,500 the next year. Year 3, what they did is they increased by 2 employees in 2025. So total, they have a net gain of 7, right? So that comes up to be 24,500. Year 4, they added another 2 jobs. Also, 3 jobs. Prior to that, they had 7 jobs. So that credit increased to 35,000, and then the next year to 40,000. So overall, in the over 5 years of doing this study, we're able to generate $136,500. And here's a key point here. In order for you to receive the $136,000 in net gain of tax credits, you gotta think, how much of a business of profit do I need to make after minusing all the costs and materials for me to profit that dollar amount? Because the power of this program, unlike, for example, like ERC that many of you guys heard of, you don't have to pay tax back to the IRS or the Department of Revenue. This is a dollar for dollar tax credit that you company has to take advantage of. And you could use it in any way you guys want, okay? This is another case study that we did for our manufacturing client. 10 jobs created in year 1. They're in a bottom 40, bonus credit for 4,000. That comes to be 40,000. But the following year, in year 2, they increased the job by 15. And then thereafter is 25. This is a growing pattern that we see in a lot of the manufacturing companies. And as you can see, over the span of 5 years, we generate over $740,000 in tax credits for their business. Okay. So at the end of the day, guys, if regardless how small you are, it really depends on, how much the credit you guys were able to receive, right? For us, we don't look at, oh, there's a big client, let's just go after them. No, for us, we want to make sure that everyone benefits from this program. Every business has a potential to grow, and we want to be part of that. So even with starting a small business with 5 or more employees, you're looking over $136,500 in the span of 5 years. Any clients over 100 to 120 employees, you're looking at an average of about $740,000 in credits over the next 5 years. So at the end of the day, we just want to make sure that if you guys are wanting to know if I do qualify, because I'm on that list of the counties, how much do I qualify? And you're not gonna know that until you actually do the study with us for us to figure out how much you're able to receive, okay? Application of the job tax credit, as I mentioned to you earlier, income tax liability and payroll withholding. So obviously, a lot of the times when you're a C Corp, when it comes to the benefit of it, you're not gonna see really big deal on the income tax liability because most will flow through the payroll. But if you're S Corp or shareholder, if you have shareholders through the flow through entity, all those credits has a potential to flow through the payroll withholding so that you could immediately save those cash flow back into your company on a monthly or quarterly basis instead of paying the amount on the G7 to the Department of Revenue. All right. So that's pretty much sums up the whole Georgia job tax credit. Like I said from the beginning, it's heavily underutilized. But this credit could definitely be a very beneficial for any business out there. It's hard to find a credit that is dollar for dollar. And more than anything, this is really a credit that is black or white. It's not a subjective test. It's a very straightforward test. Either you qualify or you don't. And Sam and I, we've been doing this for the last 16 years. We're confident in the study that we do. We haven't had a single audit. As I mentioned to you earlier, it goes to the certified process from the Department of Revenue. So if you're interested in this program, feel free to reach out to us. We'll be more than happy to have a second look for you, okay? With that being said, I'm gonna go introduce to Sam Hyun. He's one of our tax director. He'll be covering the rural zone tax credit for us today. Sam?
Thank you, John. All right, everyone. like to go over the rural zone tax credit with you. And now this is one of the newer programs here in Georgia. It was first introduced to us back in 2020. Of course, I know that was during the pandemic, so a lot of the announcement had lackluster during that time. So that is highly underutilized. It is one of the growing tax credit programs here in Georgia. It actually started with only 4 zones in 2020, and it's now increased over 35. Okay, so there are 3 components to this tax credit program. The first one is the investment component, rehabilitation component, and the jobs component. Now, this jobs tax credit is different from the Georgia Job Tax Credit Program that John had just went over. So very different. I know it has the same name, but this one's for the rural zone tax credit program. Okay. Now, I'm going to break down all the different benefits of this and how each component weighs out and plays out and how you can benefit from this particular program. So when John mentioned earlier that you had to have certain qualified activities in Georgia Job Tax Credit if you were in a tier, and this one, you do not have any qualified activity requirement. That means, like bottom 40 counties, like opportunity zones and military zones, the rural zone, you don't have any requirements. So you could be a retail business, you could be you can be a service business, professional service business. You can even be an accounting firm and still qualify for the rural zone tax credit. The one thing that you cannot be though is a nonprofit or government entity. So those are the only 2 types of businesses that will not qualify for this program. Now, another great benefit of this program is that part-time employees also qualify. So this is a full-time equivalent as well. Seasonal employees, even employees that you lease from temp agencies will all be eligible for this tax credit. Okay. Now, the job tax credit amount is up to $2,000 per qualified employee per year for the next 5 years. The investment credit amount is 25% of your investment. The rehabilitation credit is up to 30% of your rehabilitation costs as long as you maintain 2 or more jobs. So what that means is that let's say you invest in a rural zone, however, you don't create any jobs, that means your investment tax credit, you're not able to qualify for that. But if you have 2 jobs and you're investing into these rural zones, then you're able to get both the job tax credit and the investment credit. Now, this credit is also good for 5 years. The rehabilitation side is good for 3 years, and you can use 100% of this towards your income tax. Sadly, there is no payroll withholding benefit, so this is only going to be for your income tax purpose. All right. Now I'm going to break down a little bit more detail of how the investment credit and all of this works. So, for example, if you were to purchase a building in one of these designated rural zones here in Georgia, and you purchased it for $400,000, you would take $400,000 times 25% of that investment, and that is $100,000 in investment tax credits. Now, the state won't allow you to take all of it all at once. However, it's broken up over a 5-year period, and so you would get $20,000 in investment tax credits over a 5-year period. Okay. Now there is a cap for this program, so it's $120,000 maximum. So that would mean $600,000 purchase of your um, property, real estate property. Okay. All right. Now, when we get into the rehabilitation costs, so this is qualified rehabilitation expenditures. That means if you buy like equipment for your business and you're installing it into your facility, that doesn't really count as a rehabilitation cost. So rehabilitation is like roofing, your windows, flooring, wallpaper, paint, things that are attached to the building that's not, being moved, like even your HVAC equipment, water heaters, things like that. All that cost that goes into it, plus all the labor costs that went into it to have that done by the construction company, your engineering firms, your architecture firms, all of that cost is part of the rehabilitation expenditures, and you can get up to 30% of that back. which caps out at $150,000. So, for example, if you had a $500,000 renovation project, you would get $150,000, which is the maximum, and you would divide that by 3 years and get $50,000 per year in rehabilitation credits over a 3-year period. So this is a fantastic way for you if you're a small business just getting started. So it doesn't matter if you're a restaurant doing build out, or you're moving into vanilla shell at the area, or even if you're constructing new property on an empty vacant piece of land. Okay, so you can get both of the investment and rehabilitation credit. Now, the caveat of this program is that you have to maintain 2 or more qualified jobs. Okay, so that means it could be 4 part-time employees that are full-time equivalents there. It could mean 2 owners that are just, mom and pop shop working full-time hours there. But this is just to give you an example of a smaller sized restaurant that had started with 10 employees and grew their company, just adding 2 jobs here and there, and grew it to 16 employees, right? So you can get up to $40,000 in rural zone job tax credits per year for 5 years, okay? And so using the example here, we have 10 qualified jobs in 2023, times that $2,000 is a $20,000 tax credit. Then in year 2, they had increased by 2 jobs, totaling 12 qualified jobs. And then when you multiply that times 2 is $24,000 in rural zone job tax credits. Same thing in year 3, and in year 4, they had another increase, and in year 5, another one. So over a 5-year period, they got $128,000 in job tax credits. Now, remember, I told you that you can get $150,000 from the rehabilitation credit and another $120,000 from the investment tax credit. So when you add all of these up, it adds up to be quite a bit of tax credits here in Georgia. Very powerful program. Now, the beauty of this program is that you could do both the Georgia job tax credit and the rural zone tax credit at the same time if you're in a qualified zone. Okay. Speaking of qualified zones, here's a list of all the rural zones here in Georgia. From the top down, we have Adel, Douglas, Eatonton, Forsyth, Rossville, and Villa Rica and Washington that are going to expire this year. Now, when I say expire this year, that means the zone is going to expire this year, not the credit. Okay, that's a very big difference. Now, if you do qualify and you're in one of these cities and you have not taken this rural zone tax credit, you have until the end of this year to put in the application to get certified for this program. Now, the certification happens on 2 levels. First, it's going to be with the city, with the Office of Economic Development, and then at the Department of Community Affairs level. Okay, so you'll actually get a letter being recognized from the state saying that they recognize that you're in a rural zone, they recognize that you're making qualified investments and expenditures, and they'll give you a certified letter and a certification paperwork with all your details stating that you can take advantage of this program. So that's one part of it. The second part of it is now calculating the credits, preparing the tax credits forms, tax credit schedules that go on your tax returns. So that is something that we at Corporate Tax Advisors specialize in. Okay, so we help you to do all the legwork required for you to actually generate the credit. Right? It's one thing to know to qualify. It's one thing to get a letter, but you actually need to do the calculations and put these on tax forms. Now, we also have new zones that came in this year in 2024. It's 4 new ones: Blakely, Sylvania, Vidalia, and Watkinsville. Watkinsville being very close here to Atlanta, just about 20 minutes away from Athens and about an hour away from downtown Atlanta. The other one nearby the Atlanta area is Stone Mountain. So 2021 through 2025. So these are just some of the areas. If you're looking to make some investments, if you're looking for strategies even to lower your state income tax liability and you want to make investments, rural zones are a great way to do that just because you do get a 3-part component, which really drives up the credit. We've had even a hair salon in one of these cities. They only had 16 employees. They actually purchased the unit they were in, and they did a complete rehabilitation. And small business, they're getting over $60,000 a year in rural zone tax credits. And that's for a small business with only 16 employees. That is quite a bit of money, quite a bit. So as you can see, folks, this is a fantastic program. Both the rural zone and the Georgia job tax credits are highly underutilized. A lot of times we hear that, well, my CPA is going to take care of it. Well, our CPAs, the way I like to explain it is that they're like our general physicians. We see them once or twice a year. They measure our financial pulse and they keep us on tracks. However, if you're going to have a heart problem, you're going to see a cardiologist. If you have a knee problem, you're going to see an orthopedist. And in the same way, that's how we work in the tax arena. Well, thank you all for your time today. Thank you for joining us here on today's webinar. We hope this was informational. If you have any questions, if you have any comments, concerns, I invite you, please reach out to us. Love to hear about your business and start this conversation today.
Beautiful.
All
Thank
right,
you, Jose.
Yeah, thank you for the opportunity, Jordan. I appreciate that. We appreciate that.
We'll get this out. We've got some questions. We'll follow up by email through the link. And thank you again for all who attended today, and look for our webinar next month by following us on LinkedIn or reaching out directly to John and Sam and myself. You'll have links through your follow-up email coming from Zoom events. Thank you so much and have a wonderful week.
Bye, everyone.
Bye-bye.